What's up everybody? Welcome to the Stocks channel. My name is Cory and in tonight's episode we're doing another stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. Now first up we have the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action on SPY, we do see that the price closed up 0.76%. And we did still close below that 20 simple moving average. We could tell by the wick on the candle that the price action did go all the way up into the $338 level before ultimately closing down around $334. Now we do see that 5 EMA starting to cross back above the 50 EMA and getting very close to starting to cross back above the 13 EMA. So if we can get a close on the price action above that 20 simple moving average and see that 5 EMA cross back above the 13 EMA, that'll be the first signs that this bearish trend is reversing and we're going to start seeing a bullish trend develop. So let's go ahead and jump over to a 1 hour chart and check out some of the price action we had on a smaller scale here. And we do see that we are forming these higher highs on the 1 hour chart, which can be seen by the high formed here, another higher high formed here, and now we have yet again another higher high. We also see that the lows are getting higher as well, and we do still have this gap below us where we could come down and close this gap and still head up with higher highs and higher lows. So we're developing this pattern where we had this lower high and lower low, and now we're going into a pattern that is higher highs and higher lows. So if we continue to develop this pattern, even if we do come down and close this gap, we can still come back above and form another higher high and start forming this bullish trend on the 1 hour chart. So what would that look like on the daily chart? Because as you know, we put more weight on the daily chart right here on this channel. And on the daily chart, that would still be a bullish setup because we would start to see the situation where we came down here, formed this little peak and valley, and now would start coming up here and forming higher highs and higher lows. And all we need to see now is a break back above this $342 level, and we will have a significant higher high on the daily chart, which will show us that we are possibly going back into that bullish market and that the correction is most likely over. So on the S&P 500, to say that the correction is over, we really need to start closing back above the 20 simple moving average, see these moving averages cross back above to the bullish side, and get one solid close over the $342 level, which would get us back into that upward trending bullish momentum pattern that we like to see. And then we would like to become buyers of the dip and buy off significant support levels as we go back into that bullish upward trend. So right now, the number one support levels that I would be watching as a buyer going long, starting to accumulate that long position on the S&P 500 would be the 50 EMA right around the $331 level. And more importantly, I would wait to see if this gap closes at the $329 level. So anywhere between $329 and $331 is a gray area on the SPY ETF to start accumulating a long position. But remember, we're still below the 342 price level, so we don't want to go all in just yet because we really want to wait for that bullish trend to develop before we become too bullish on this market. But things are looking much better in a price action and a technical analysis viewpoint, and we are starting to see some bullish price action closes above these moving averages. So getting that close above $335 would be a solid close above that 20 simple moving average, and we should start to see that 20 simple moving average flatten out from its downward trend. And then once it goes flat, if we're going into a bull market, we would expect to see that 20 simple moving average turn up and start heading to the positive direction. And that will tell us that this short-term bearish trend is starting to end, and we're now heading into a short-term bullish trend. Now remember, if we zoom out on this market, we are already in a long-term bullish trend, which can be seen by the trend that we've had since the March lows. So remember, there was no reason to believe that this was anything more than an ABC correction to that long-term bullish trend. And now that this ABC correction is ending, we would expect to see this bullish trend continue, but we still need to see the reversal of that short-term bearish trend before we become too bullish on this market. So zooming back in here, we see that the price action had a very volatile day. And if we go back to the 1 hour chart, we could see significant volume increasing right near the close where we had that huge sell-off. However, we still do have higher highs and higher lows on the 1 hour chart, which is always going to be indication of a bullish trend. Now remember, this was also the last day of September, and if we look at a monthly chart, it kind of shows the price action that we had all of this month, where we were as high as 359 on the SPY ETF, and we went as low as $319. And ultimately, we closed out the month of September up here at $334. So overall, September was a very volatile price action month. and we could still see a very volatile October. So it's still too soon to say exactly what's going to happen in next month's trading. But right now it is looking like October is going to potentially be the beginning of another bull run. And we still need to watch that price action to see how the first week of October trades. And we'll know a lot more in a few more days exactly how this trend is going to play out. So next up, let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF for the triple Qs, and we see that the Nasdaq 100 by far is looking better than the SP500 SPY ETF. Now we know that because the triple Qs ETF did close above that 20 simple moving average today, and we did get a confirmation follow through of that 5 EMA crossing back above that 13 EMA, which is showing us that that short-term bearish trend is ending. So we have the 5 EMA now trading above the 13 EMA as well as the 50, and it is very close to crossing back above that 20 simple moving average. Now you can see with today's price action on the Nasdaq 100, we did come all the way up to our resistance level, which you can see by this wick, and get rejected and close lower. But that's okay. There's nothing that says we have to break through that resistance level on the first try. And we're still going to watch to see if the Nasdaq 100 could break back above this $281 level. And then we will have all of the price action and all of the technical indicators that tells us that the Nasdaq 100 is likely going back into that bullish market. We'll have that higher high on the daily chart, and we'll have all of the technical trends going into the bullish direction, which will tell us to start buying the dips and riding that bullish wave of momentum going back to the upside. So on the Nasdaq 100, we have support levels at the 50 EMA at $271, as well as the gap closure at $272. This level should be a great buying opportunity if we see this bullish trend continue. In any event we get a pullback into these areas, we will be a buyer of the Nasdaq 100 triple Qs ETF. And we always have to be aware that there's potential for this trend to break down. So we always want to set a stop loss below our support level, because if the price action does break down and we do get stopped out of that position, we will have the next opportunity to buy back at the next lower support levels. But right now the Nasdaq 100 is looking really good, and that close above the 20 simple moving average is a great sign for the bulls. So going over to a 1 hour chart, we can also see here we do have higher highs and higher lows, and we do still have this gap open between the $272 and $274 range. So if we're going to be a buyer of the dip and we do come down and close this gap, we would expect to see gap act as support and then come back up here and make another attempt at this 281 resistance level. If we can break above that resistance level and close above there on the 1 day chart, that will be a huge positive sign for the bulls that we're likely to see higher price targets, and we will have those higher price targets once we get that confirmation on the chart. So going back to the daily chart, we can see how critical that $281 level is, and we're going to be watching that level like a hawk for critical resistance levels. And if we do close above that, we will start generating upside price targets, which we'll have right here on the stocks channel. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF. And we see that the Dow Jones also did close above its 20 simple moving average today, and we still are very close to having that 5 EMA cross back above the 13 EMA. So while we don't have a true reversal of that bearish trend just yet, we are getting very close, and we're only about a day away from the Dow Jones starting to show positive buy signals on the Dow Jones DIA ETF. Now on the DIA ETF, we do have that gap going all the way back down to $272. And if we jump over to that 1 hour chart, we can see that we're also forming those higher highs and higher lows. And we could come back down in here and close this gap and still come back up and attack this resistance level at $282. So very similar to the Nasdaq 100, we want to see this level act as support, and we ultimately want to come up here and break this resistance level and form that higher high on the daily chart. So the Dow Jones is looking really good today, closing up over 1% and closing above that 20 simple moving average. So it is looking really good, and it is likely that this ABC correction is ending, and we're starting to see a resumption of that long-term bull market that we've been witnessing since the lows in March. So next up is the VIX, which is our fear indicator, and we see the VIX closing up just a little bit, 0.38% today, and really going absolutely nowhere, just kind of trading sideways. So in order to see new all-time highs on this market, we really want to see the fear leave this market, and we really want to see the VIX start bleeding out and heading down below 23.5. So right now fear is just kind of lingering around, and we're right around that VIX level of 26, which is still considered an elevated VIX level, and we could still see quite a bit of volatility, but it is looking like fear could start leaving this market soon. And if we do see the VIX start to head lower, we will expect to see the stock market continue to head higher. So next, let's take a look at the sectors driving this market. First up being the financial market. And we do see financials closing up 1.35% today, closing just barely above that 13 EMA. We still have that 5 EMA trading well below the 13 EMA, and the price action still closing below that 50 EMA. And we do still have lower highs and lower lows on the financial market. So while the financials do look like they're bouncing a little bit, they're still in a bearish trend, which we don't really want to see the financials in a bear market if we expect to see the stock market go higher. So we want to see the financials come back and start attacking and closing above the 50 EMA and the 20 simple moving average. And we want to start generating higher highs and higher lows on the financial market to really become fully bullish on the stock market again. So right now, it's a step in the right direction for the financial sector, but we still do have to recognize that financials are in a bearish trending market, and we really don't want to see that if we're going to become bullish. Next up is the industrial sector, and we see the industrials had a very volatile day today, going well above the 20 simple moving average and then ultimately closing right on the 5 EMA, closing right below that 13 EMA. So not what we want to see on the industrials, and again, we're still in that short-term bearish trend, and we don't want to see the financials in the industrials in a bearish market if we want to see the stock market go higher. So the bulls still have more work to do on the industrial sector as well, and we really need to start seeing that close above that 20 simple moving average and that 5 EMA cross back above to the bull side. Next up is the healthcare sector, and we do see a little bit of better news on the healthcare sector with the bulls closing the price action well above that 20 simple moving average, and we do see that 5 EMA starting to slope aggressively to the positive side and getting ready to cross back above that 13 EMA. So this is good news for the healthcare sector, and we do want to see these sectors become bullish if we're going to get bullish on the rest of the market, but we still do have to recognize that we have lower highs and lower lows on the healthcare sector, but the bulls are making positive progress, and we could be seeing the end of this correction very soon if we can continue to see these bullish price action closes. Next up is the US dollar, and we're looking at DXY, and we see the US dollar really just going absolutely nowhere today, closing flat on the day, even though it had a very volatile day of going all the way up to 94 and all the way as low as 93.70. So the US dollar still showing signs of strength, and we still have a bullish trend on the dollar. And if that dollar can continue to show strength, we could see the stock market go back into that correction. So we need to watch the dollar very closely, and we need to see what the dollar is going to do, because right now it's still in a very bullish trend and it's still holding up very well above support levels. Next up is gold, and we see gold getting back up into an area of resistance, getting rejected right at the 13 EMA. So on gold, we're still fully expecting to see gold come back down to the $1,800 level. And if we get there on gold, we are considering buying gold as a hedge to the dollar weakening, just in any event that the dollar does start heading back down into that downtrend. Next up is Apple, which is our market moving stock, and we do see Apple leading the charge on the market, closing back above the 20 simple moving average, and we also see that 5 EMA crossed back above that 13 EMA today. So Apple finally did snap its bearish trend, and it does look like Apple is ready to start heading higher. Now we do still have to acknowledge we have the gap down below at $96. So if Apple does show weakness and this is more of a false breakout to the bull side, just really acting as a bull trap, we will have another downside price target on Apple at $96. But right now Apple is looking very good, and it is looking like it's ready to reverse its bearish trend. And if we can get a test of support and bounce back up to the bull side, we'll know that Apple is going back into that upward trending bull market. Next up is Tesla, and we do see Tesla also looking bullish today, closing back above all of its moving averages yet again. And we do see confirmation that 5 EMA has crossed back above the 13. And we are breaking out to the upside of our consolidation wedge pattern. So on Tesla, now that we're breaking out of this wedge pattern, it does look like the bulls are going to drive the price back up into this $500 level and test the previous all-time high. So this could be a great trading opportunity for Tesla, going up into the 500 test and set a stop loss below this 20 simple moving average, because if we head back down into this consolidation wedge, we'll know this was just a false breakout, and we are not ready to start seeing bullish price action on Tesla just yet. However, it does look like the breakout is here, and we do see confirmation with that bullish trend. So I would fully expect to see Tesla head back up to that $500 price target and see if we could break back above and form a new all-time high. Next up, we have Bitcoin, and we see Bitcoin still heading upward in this bullish trend, and we see that 20 simple moving average starting to have that nice positive slope, and we're seeing the price action walking right up that 20 simple moving average, closing higher and higher little by little. So on Bitcoin, we're still waiting for the test of 11,000 to see if the bulls can break back above that, and then we would expect to see another test of 12,000, and if we could break above 12,000, we should get back to 14,000 in a flash. So right now it still looks like the bulls are in control of Bitcoin, And we know that because that $10,200 level is still acting as support and the bulls are still driving the price higher little by little. So to pull this all together on the SP 500, it is looking weaker than the Dow Jones and the Nasdaq 100, but it is just about another day or two away from closing to the bull side and snapping this bearish trend. Now we do know the Nasdaq 100 is already going back into that bullish trend, but the S&P 500 is still playing catch up because we saw that weakness in the financial and the industrial sector. So it is a little concerning that the financials and industrials are lagging behind and still in that short-term bear trend. So we do need to keep that in mind, that the financials and industrials are struggling, and we do see strength in technology. So if we can hold up on these support levels and continue to form higher highs and higher lows, we're going to become bullish on this market yet again, and we could say that this correction is over. So we're going to learn a lot in the next couple of days, and you really want to watch these critical support levels and resistance levels. And remember, on the S&P 500, we really want to see a close back above 342 before we become too bullish. So thanks for watching, everybody. Don't forget to smash that like button to help me out. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of my technical analysis updates. Thanks for watching, everybody. And as always, I will see you in the next episode.